How's it going, everybody? Thank you for being here. My name's Antonio, and today I'm talking to a former Canadian TV star of German descent who was voted Yukon Prospector of the Year along the time I was born. He just told me that he's got T-shirts that are older than me, and but he's still to this day a gold and a base metal prospect generator up in Canada. He's also a placer, placer, gold miner, and a technical advisor to a few junior companies. And some believe that he's a rough father, but we're about to find out. Bernie Kreft, thank you for investing your time in me, sir.
Hey, no problem. Thanks for having me, Antonio. I think that was a pretty good summary, I
Is
guess.
it? Yeah. The pleasure is, of course, all mine. As I was telling you earlier, it's exciting to talk to you because I used to watch you on the Discovery Channel probably about 10 years ago or something along those lines. So, yeah. What did I miss in that description of yours? What's an interesting fact that about yourself that maybe people who watched you on Yukon Gold might have missed?
Probably missed a whole bunch of stuff. I mean, it's television, right? So
Right.
they have an agenda and they have a story they want to tell, and then the creative department gets involved and stuff like that. But I mean, as far as that goes, I like working out. I like eating good food, and health is important to me, and family's pretty important. So that about covers it.
Nice, nice. Well, you look very healthy for a 35-year-old, so I can say
Thank you.
that. No,
Thanks,
fair
Tony.
enough. Fair enough. And
Yeah.
is it worth it being on television, like financially or in terms of the connections that you make? Like, would you do it again if you could go back?
Uh, I probably do it again. I got myself and my two boys, and one boy is quite into the whole filming thing, and the other one hated it with a big passion. And then myself, I enjoyed it and I hated it at the same time, right? I mean, they take a lot of time out of your day, and they don't pay enough to make up for the time that's lost. But sometimes you do things, I mean, it was an opportunity or a chance that not a lot of people get. So, you jump in and you give it your all, no matter what you think about it. Ultimately, again, like I said, we probably lost money on the deal, but maybe we made some contacts or got a little fame or a little notoriety maybe that normally wouldn't have been there.
Nice. So you one of your boys is still in mining and the other one's not, or?
Oh no, they're both still in mining and still in prospecting. Just one of the boys really liked the filming and one of them hated it.
Oh, the filming itself, I see.
Yeah, the filming itself. I mean, the one's pretty goal oriented, and he could see that it's taking a lot of time out of her day, and he would have a lot of discussions after the cameras went off. And the other one was like, "Yeah, this was fun. I get to be a TV star." So can't keep everybody happy.
No, it's true. It's true. Maybe one day he's gonna land a Kardashian or something. Who knows?
They're both married up.
Okay, I'm
Careful what
sorry.
you
Yeah, I
say,
should not
Tony.
have spoken too soon.
Yeah.
Hopefully they're not.
Hopefully they're not watching, but maybe they will.
But so they're prospect generators. They're taking after you. I believe you took after your father. Like he used to take you to hit stones with hammers, basically.
Oh yeah. I mean, I started out at probably 5 years of age, going on little trips with my dad. He was a part-time prospector. He was more of a businessman. He had a painting business and a decorating business, and we had a family resort, Takini Hot Springs and stuff like that. But on the weekends, we'd always try and get out on the weekends, and invariably these weekend trips would turn into prospecting trips, and that's how I kind of grew into the business. And the kids came along with me, and me and my boys were still all working together, and I've got the next wave coming. I've got 4 grandkids now, and they've been out on a few prospecting trips with grandpa already, and it's a good time.
Awesome. This is you're living the dream. I would watch that TV show if you ever want to make that.
Well, check out my Twitter feed, Tony. You'll see a couple of videos every so often pop by of the kids out in the forest trying to strike it rich with grandpa.
It's true. I recommend. It's funny and it's educational too. Your Twitter feed. talking about education, here's a rookie question that I think I sort of know the answer of it, but I prefer to hear it from you. What is a prospect generator? What do you guys do?
Well, I don't know if we're really prospect generators as much as we're prospectors that generate targets, right? I guess so.
Okay.
To make, the English dictionary definition of the word prospect generator will be a prospector that generates targets, and that's effectively what we do. We take ideas, over the winter and spring and fall when it's too cold out to prospect. We'll generate ideas, and then in the summer season we'll go out and test the theories that we've developed over the winter, and sometimes they work out and sometimes they don't. But that's how discoveries are made, right? So,
so I could literally walk up there, well, I guess if it's Canada, I don't even have to go there anymore. Like I could do it online, I believe. So I could do that, and then I could get a bunch of other people, I guess, to spend money exploring that project for me. Is that is that correct?
Well, yeah, ideally, I mean, like the initial capital outlay comes out of my own private pocket, so I'll fund these little trips. Like a couple of weeks ago, we were in Dease Lake and we were prospecting a whole bunch of grassroots targets, like early stage stuff, looking to make a new discovery, and that financing comes out of my pocket as an individual. Should we make a discovery, then it'll go on to a junior company, and I'll approach one of the many juniors that I know or have contact with and say, hey, we've made a discovery in the Dease Lake area. It's a arsenopyrite mineralized whatever, or a copper thing, and you interested, and then that's just how it works. And then hopefully they come in and do the exploration and find something or advance a target.
What's the business model for you, though? Like, how do you end up making money on that whole deal?
Well, find something cheap and then sell it for a lot. I mean, it's really, it's pretty simple, right? I mean, you'll make money if you're successful. You'll starve to death and live a horrible life if you're not successful.
So you would you would find the land, and then, I'm sorry for interrupting, but you would find the land and then sell it to a junior. Then that's sort of what you do.
Yeah, I mean, I'll find the land. Like in this case, I think we've made a couple of discoveries, and we'll have to go back and assess the quality of the discovery. Typically, I don't like bringing projects to companies unless they're ready for the public eye, right? And so they have to, sometimes like, okay, so we'll go down, we'll make the discovery now. We might have assay results back in the fall. Follow those assay results up again, a little more work, a little more detailed in the areas of interest. And then when it gets to a stage where I feel comfortable that's worth exposing to the public eye, then we'll start approaching juniors and say, hey, we have this much money into it. We have, these kind of discoveries made, or whatever the nature of the discovery is. And are you interested in doing a deal?
And would you sell like the complete project? Because the way that I understood it is that you would only like you would partner with them in a like a 70-30 fashion or something along those lines, and then they would have to spend money. They would have to spend money exploring the project, but you still get to keep part of it as an owner. So if it ever becomes mine, that's how you also profit.
Oh yeah, no, for sure. I mean, the deals are as varied as the properties are varied. There isn't sort of a real template or anything else out there. It's just on a deal by deal or a case by case basis is how you structure the deal on the project, right? So invariably, though, yes, as a prospecting company or a prospecting team with myself and my sons, we always keep a little bit of a net smelter royalty or some sort of royalty, so that if the property does end up in production, we'll benefit from the production. So I mean, it helps make the initial outlay, which sometimes whatever we spend, it's gets taken care of down the line 10 years from now or something like that, right?
So long term, this could be a very interesting play, though, then, because if you've 3% of some, or 2% NSR, it could be like off a big mine, could be a lot of money.
yeah we've had some good successes in the past, right? So we've I think overall in in the business, we have exposure, like we have royalty exposure to probably close to 8 million ounces of gold and several billion pounds of copper, right? And so,
Wow.
when at some point in time, all we need is one of these royalties to kick in, and and then the company or the business takes a really big jump forward.
Hmm. Is this investable though for retail investors? Like, maybe we could talk about the advantages and disadvantages of prospect generators later.
Mhm.
But are there companies? 'Cause I'm not aware of a lot of companies that do
Mhm.
that are investable. But are there any publicly listed companies?
Yeah, I mean, there's a lot of pubcos out there that are prospect generators. Eagle Plains Resources, Commander Resources, Alianza. Uh, oh God, what's that one? God, they're in the Yukon. I should know. There's quite a few names out there. Of course, I got a blonde moment while I'm on camera, and so I can't think of the guys' names. But they're in the Archer Cathro group in the Yukon. Gosh,
You're not publicly listed though, as
Strategic
far as I
Metals.
remember.
Pardon me.
You're not publicly listed though, as far as I remember.
No, we're completely private, but we do partner up. Like I've partnered up with a company called Kestrel Gold, and they've gotten a couple of good projects out of me. And I'm going to start doing a little bit of work for a thing called Gambier Gold once they sort of reorganize corporately. And we do have a lot of option partners out there. I think we've got right now going, oh God, probably four drill programs right now on things that are private Kreft properties that were vended out to public companies. So a lot
Hmm.
of exposure to discovery right now.
Okay. Okay. That's interesting. What are the advantages? I'm trying to think of an advantage. Like, obviously, if you have another company explore your project, you as a company don't have to undergo dilution. But what
Mhm.
else? Why do you like these type of companies?
Why do I like prospect generator companies, or why do I like companies as a whole? Like, I mean, for us, again, when we generate these targets privately, we need somewhere, like, it gets to a stage where financially it becomes expensive for us privately to explore them, right? So,
Hmm.
to charter a helicopter and pay for $10,000 worth of assaying and do a few other little doodads. I don't mind making that expenditure, but to start financing drill programs privately, it gets expensive fast. So, having a partner come in and say, look, Bernie, we like what you and your boys have found. We want to do a deal on the project. Here's what we're going to do, and then I'll say, great, and sounds good. And so I've got a few of those going, and quite a few of those going, quite a few deals where you need to bring in the public money to further advance the project. I mean, let's say your typical drill program's $200,000 or something like that, or small drill programs, $200,000. I can only do maybe one or two of those a year before it escapes the resources I have at hand. And so it's always better to, get a company in.
True. I was just
Mm-hmm.
wondering, as a retail investor, because I don't have
Mm-hmm.
any prospect generators in my portfolio, would
Mm-hmm.
I want to consider them in terms of risk reward? Do you think they're advantages?
Yeah, I mean, if you have exposure to a prospect generator company, like a public company, I mean, there's usually typically two ways companies develop. They have a flagship property, and everything revolves around one property, or you have multiple targets within a company, and then that starts turning into kind of like a prospect generator type thing. But true prospect generators, again, yeah, I mean, it's an investable. It's definitely investable. It's just you have to look at the team, you have to look at the quality of the properties. Not unlike anything else. Some of the people in the game, they have a marginal team, and they have a bunch of properties, and they get by on doing shitty deals with shitty companies on shitty properties. But there's other ones that they have legit projects, they have legit management, they've got a vision, or a you know or whatever. So yeah, I
So,
mean,
so is
it's
it
like
is management? Because a lot of times I would ask people like, hey, what makes a good company? In this case, I would ask you what makes a good prospect generator. But I feel like you think management is among the most important ones.
management for sure. I mean, management can avoid a lot of problems. Management will know that, the locals are not pro mining. Management will know, like good management will know things that, you know, all too often you'll have management that's, living in Toronto or so far removed from the epicenter of the actual activity that they don't have a clue what's going on, right? So having actively engaged management is good. Making sure they're knowledgeable is good, right? So if you can find that, that's certainly going to help you avoid a lot of the pitfalls and pratfalls that follow exploration. But again, like management can only do so much if the property sucks shit, right? I mean, it's pretty basic. Like if your property's terrible, you can have the best management in the world. So it's kind of like a dance routine, Fred Astaire and Ginger Rogers or whatever. I mean, you need the team.
Hmm. Could we maybe make a list out of the things that management has to be or have in order for you to be interested in a potential deal or in a potential property? Like, because you told me they have to be from around there. So if they're a prospect generator in the Yukon, you want them to be from the Yukon and be there physically. Is that
Well,
what you mean?
they don't necessarily have to. They don't necessarily have to be from the Yukon. They have to. They have to know the Yukon, right? I mean, you can know the Yukon and you can live in Calgary, you can live in Vancouver, you can live in Toronto, and you can know the Yukon. You can live in Austria and get a feel for the Yukon, but you have to have enough knowledge about the area that you can see problems coming, or where the problems are going to be. And then again, the Yukon is a pretty open spot for exploration, as is BC. But when you go through BC and the Yukon, you'll see there's a lot of areas or districts that are effectively no go. Don't, why even bother? This is too remote, or that's too pristine, or, this is a old growth forest, stay away from there. There's a spotted owl here. I mean, that's the type of knowledge you need, right? So that's important from a management point of view.
But you don't necessarily need them to be geologists by education, or you don't want to see a specific degree.
But, I'm doing perfectly fine and I have no degrees. So, you know, um, you have to care, you have to live it, you have to breathe it, you have to have passion for it. And if you have all those things, then, finding out the good and the bad of the areas that you're working in will come naturally, right? I mean, if you don't have the passion and you don't have the drive and the determination, a lot of these things will escape you, right? If you're out busy working on your golf game instead of keeping up on what your exploration crew is doing, well, maybe your company will suffer a little bit. But if you're on the phone every evening and every morning, or keeping tabs on things, it's gonna make sure it's gonna lead to a greater certainty of success. Just the
That's true.
engagement level.
It's true for every company, though, isn't it?
Mm-hmm. Oh,
So,
yeah, for sure.
even if you're running a cafe, if
Yeah.
you try and use it as a cash cow and you don't care about anything else but the bottom line, like you don't care about, am I making good croissants and good coffee? And like if you're not researching different coffees, for example, was something that me and my wife did, but you're only thinking of, oh, how do I make the most money on that coffee instead of thinking, how do I deliver the best coffee first?
Right.
Yeah. Sounds like the
If
same
you
thing.
well, if you ever watch the show Field of Dreams, right? Kevin Costner in the Field of Dreams, James Earl Jones or whatever the guy comes and visits him in his dream and says, "Build it, and they will come." You have to have a vision. You have to have that care. It's not even quite often for me on the private end of things. It's not even about the money. It's about doing good procedure, doing good approach, and we may lose our shirt on this private job, but it doesn't matter, because I believe in the job, I believe in the target, I believe in the project, and then you go and do it, you build it, and they will come.
Yeah. So you got to get a feel of the management. You have to know that they care, basically. That's
Oh
good
yeah,
advice. Sound
right. I
advice.
mean, if you're talking to a public company president, or the management of a public company, and they don't care, or yeah, you can rapidly find these guys, or they rapidly expose themselves. I mean, you don't even have to find them. They will, over the course of time, expose themselves. They'll you'll see it in their
Yeah.
day-to-day actions if you have enough interaction with them.
Especially in their shoes, if you meet them in conferences and they're way too shiny and their suits are too expensive. That's like going joke. I don't know if that's true. I use it I'm trying to be funny when I say that, but I
Yeah.
don't really know if that is it true? Like, is that a thing? Like if somebody has a too expensive suit or something along those lines?
No, I mean, I don't know about the too expensive suit, but if they're if they're living a lifestyle, or they have a if they're living a lifestyle, or they have a huge passion outside of the business. I mean, it's good to be well-rounded and have interests away from what you're doing. But, if those interests supersede what you're doing, maybe what you're doing isn't getting the focus that it deserves. And maybe you're starting to miss things, and little things fall through the cracks. And typically a dam doesn't catastrophically fail. It fails bit by bit. A small leak develops, and then 2 years later the dam explodes and the city gets washed out. But so if you come across management that has maybe too many things on the go, or it's a case by case basis, really. Though you'll smell quality, and then you'll sense not quality.
Well, I guess that's easy for you because you just sort of know people. Yeah, again, as I said at the beginning, you've got shirts that are older than me. So you've just you built this sense of feeling and knowledge of people in the industry. But I was just wondering if I could maybe build a list that sort of helps me stay away from those guys at the beginning, like a list of red flags. And that's sort of what I was trying to. I'm someone who tries to quantify everything. Like I want to have a spreadsheet for everything, but sometimes maybe it's not possible.
No, I mean, like, whether you're looking for projects, I'm big on spreadsheets as well. So in that, we're brothers. I like the spreadsheet thing. It helps me keep track of projects, and I've got little algorithms I've developed over the years, and any new project that we sort of are interested in that gets put into the spreadsheet, and there's a calculation that takes place. So it takes the emotion, and then takes the feelings and all that stuff out of it, and so you're just left with hard numbers, and this is what it's going to cost, this is where it is, et cetera, et cetera, et cetera. 25 columns later, I've got a pretty detailed picture that takes the emotion out of the picture. I got a pretty detailed look at the property or the target that I want to go to. That and all too often people get emotionally attached to projects or targets and stuff like that. But yeah, I don't know.
Well, I guess when it comes down to the people, the management of the company, there's always emotions attached. There's gut feeling. There's stuff that you cannot really put on a spreadsheet. But then I guess the land on which you're prospecting, as you said, matters a lot too. I made a joke on Twitter a few weeks ago about me coming up to the Yukon, staking some ground, and listing a company on it to live off of that. And you answered that, by the way, and told me that there's a lot of moose pasture over there, and because I know sort of, how should I say this? I'm wondering how to put this into words, because it's you have a lot of these companies that the bad management is going to get associated with the bad land pretty quickly, if that makes sense. So you don't often get something like good land and bad management. Like, it does happen, it seems, but it's not often. Most of the times when you see bad management, oftentimes they also have a bad piece of land, if that makes sense.
Yeah, I mean, bad management. They pay themselves high wages. Bad management will spend more on wages and more on marketing than they actually do on the ground. Again, that's my opinion. Shareholders, maybe they like the promotion, and it's stocks are a funny thing. They're emotional driven vehicles designed to make money. you know it But bad management, yeah, no, for sure, it'll expose itself in a myriad of ways, right? You'll see them, selling shares at inopportune times. You'll see them, like I said, paying themselves more than they spend on exploration. You'll see them picking up projects that are more promotable than they're actually, than their mineral potential, right? So where the promotional value of a project exceeds the mineral potential, then you start knowing that, maybe there's something up, and they'll, slowly but surely, bad management will, like I said, expose itself.
Hmm. Hmm. Interesting. Unless they make me broke in the process, I'm fine with it.
Yeah.
But talking about land, is it like you're specifically focused on the Yukon, you yourself, but are there other places that, I mean, there are, but are there places that you deem interesting at the moment? Maybe places that you're putting your own personal money in as a retail investor?
Well, right now, it's not just the Yukon we work in. We've got a swath of properties across the Yukon and BC. So, we're putting a lot of money into BC. We have a lot of projects in both jurisdictions. I love them both. And typically where I put my money is where I kind of know, like I know a little bit in the background, right? So maybe it's not available to your average investor, but I'll know things that the average investor just would never be able to know, or would never think of thinking about, right? So when I invest, I'll invest in companies in the jurisdictions where I have the most experience. Yukon, companies active in the Yukon, companies active in BC. Yeah, that's about it. And I don't have many investments in companies that operate outside of those jurisdictions.
I was hoping
Right.
for some Latin American hot tip that you tell me, hey, the political situation is bad, but the geology is really good. You should go. Does that, like, you don't look that far?
Like every so often I've thought of going down into Latin America prospecting. I was invested in a small company. They were doing a drill program somewhere in Mexico, and it just sounded terrible from a permitting perspective. And so whether it's private personal prospecting or investments, like I said, I like to stay away from places that I don't truly understand, because so much can go wrong. I mean, you can literally have a disaster unfold and not know about it if you're not, again, familiar with the area. And then again, going back to the management thing, maybe the management isn't even familiar with the area, and then they don't see the disaster that's about to unfold, but everybody else does. That's, immediately associated with the project.
Hmm. What if some of your biggest hits been in terms of type of company and type of deposit? You don't have to name specific names or
Mm-hmm.
anything like that, but the type of deposits or the type of workings that I want to sort of reverse engineer the years of experience that you have built into like an hour of an interview. So
Mm-hmm. Mm-hmm. I'm a big fan of copper gold porphyries. Just economically speaking, the copper and the gold kind of offset each other. When one's up, the other one typically should be down, and vice versa, right? So if copper's high, gold's normally, like in a normal market, I don't think we're living in normal times right now, but in a normal market in normal times, copper's up, gold's down, gold's up, copper's down. That's usually how it works. So I always love copper gold porphyries. I like epithermal gold silver systems. They're a little more sort of within reach of a junior, right? So if I'm going out and doing private prospecting, I need to come up with product or projects that will sell into the market. And if you find yourself a good copper gold porphyry or a good epithermal gold silver, those will sell for various reasons.
What do you think of? I see a lot of CRDs that CRD deposits, carbonate replacement deposits. They seem very interesting to me, but at the same time, there's also a lot of promotion going around them. And I don't know if one is necessarily bad for the other, but what do you think about those type of deposits? Because there's also, I'm sorry for interrupting you before you even started, but there's also a situation where you can have a CRD on top of a porphyry. And that sounds like a very interesting situation to me, but I don't know if it's a realistic thing.
I mean, it's like a gigantic plumbing system. You got the boiler down in the bottom of the house, maybe even, in the basement somewhere, and then the plumbing kind of spreads out from there. And so the boiler or the boiling, the core of the system will be the porphyry, and then kicking around on the fringes of a copper porphyry deposit is going to be a whole host of goodies. So, as far as carbonate replacement deposits go, whatever makes money, whatever, economically, whatever looks good economically, really. I'm a cheapo. I'll do just about anything. So,
but is it because again, you're hearing a lot about them. Dr. Peter McGaw had a big hit with that in Mexico, I believe, and now there's a few companies popping up with this type of deposit up in Canada as well, in Alaska as well. So there's not like you don't have one opinion where you say, oh, they're very good or they're very bad.
No, I mean, it's on a property by property basis. About the only thing I would say is that, you have a pyramid or an apex of minerals, and at the top of the apex is probably copper and gold. And then, you go down a couple of levels and you're in the silver and the lead, the zinc, and then you go down a couple of levels and, and then you get these more sort of obscure little metals, right? And typically you want to kind of focus on the metals that are sort of most in demand consistently, right? There's metals, again, like copper and gold, that are consistently in demand and almost always in vogue. And then there's little submetals, like I don't know how the whole lithium thing's going to work out right now. It's going gangbusters, maybe in the future, who knows. Things like tungsten. Tungsten is a tough one. The Chinese control a lot of the market. So, you can go out and you can prospect or you can explore for things like tungsten and stuff, but the market isn't as consistent. The pricing goes up, the pricing goes down, and if you're exploring for something and you hit the market at the right time with the right pricing on anything, it's going to be good. But you'll maximize your chances by having a metal or a mineral with a broader appeal.
I believe it was it Eric Sprott who said something like, you can have the best management and the best property, but if the price is in the dumpster, nobody's making money.
Oh yeah, no, for sure. And again, that's why you want to sort of maximize your chances by focusing on, the apex minerals or the apex metals. You know what I mean? Like the golds and the coppers and stuff like that. Molybdenum, tungsten, tin. They all seem to thrash about, and they have momentary fits of excitement following them, and then then they go into a deep slumber for 5 years, right? And if you grab yourself a tin or a tungsten property or a tin and tungsten investment vehicle, and it's on the downside of the market where it's about to go into a big slumber, then chances are your investment's going to just evaporate.
You said something like that's why you need to be in more stable metals. I thought you were going to say that's why you need to stay away from vanadium, because I got sort of burned on vanadium when must have been 2018 or something along those lines, and I was not aware of the cyclicality nature and how aggressive it was. With vanadium is one other example that it goes through these massive booms and busts. They're very euphoric when they're going up, and they're very painful when they're going down.
Oh yeah, no, for sure. I mean, I had a contact back, and I remember the vanadium boom, the vanadium boom of third quarter 2018 or whatever. It lasted about 4 months.
Yeah.
And you sit there and you go, I got a contact out of Toronto phoning me, hey Bernie, do you have any vanadium? And I'm like, let me take a look. And then by the time you come up with a vanadium project, I'm like, Jamie, I could put this vanadium thing together. He's like, Bernie, the play's over. And it's just like, where did it go? Right. And again, going back to things like copper and gold, that doesn't really happen. People are, the waves are a lot smoother. It's like being on the ocean and you have these little choppy waves and up, down, up, down, up, down, razorback teeth on the chart or whatever, versus nice long waves. It's a lot easier to navigate in the smooth rolling ocean than it is in those choppy little seas.
Yeah, definitely, because you can also focus on reasonable all-in sustaining cost, because I guess it's the chances of gold going like into the 1200s from here are not super large. It's not impossible, but the chances for vanadium going under $1 are much larger. For example, I'm just I'm spitballing. I don't want to be specific, but that's what makes it more attractive in terms of risk, I guess. Talking about the different, go ahead.
Yeah, like and if copper does go down or gold does go into the toilet, and that's entirely possible too. I'm not saying these metals are infallible. What I'm saying is, again, the waves are a lot smoother, so that if you see something that's a copper-based project, and right now, let's say copper is in the toilet, say copper goes to $2 and nobody wants copper, when you do acquire one, that the wave will come back. Right. You can't be that certain with some of these smaller sort of niche metals, right? You don't know for sure that the wave is going to come back on the niche metal, but and then again, from a private prospecting perspective, it's good that way. I mean, I like sort of focusing on the ones that there's always going to be a market for, and public companies would be wise to do the same approach. But I mean, we also need lithium and we also need vanadium and stuff like that. And maybe the lithium will be the wave of the future, and maybe vanadium will make a comeback in 10 years. You don't know.
Hope it lasts more than an hour, though, when it does.
Yeah.
This also reminds me of something that somebody else told me. I still cannot remember who told me that, but they told me that when you're looking for an investment, you start by looking for a commodity that has an undeniable demand source. And you buy into it when it starts getting supply challenges, because that's when it's due for the next up leg, if that makes any sense.
Oh yeah, I mean, copper I think would be a prime example, right? Exactly. Copper is waffling around in some sort of purgatory right now, but long term, you can see the writing on the wall. Mines are getting depleted. New mines are becoming harder and harder to discover. And that's, like I said, 5 years ago, the business, like my personal private business, we made a focus we focused on acquiring copper projects, and, now we're reaping the benefits 5 years later. So nice. It's a good thing.
Yeah. And that's what I'm being told. It's true that I'm being told that by copper mining CEOs, though, so they're obviously biased, but I'm being told that it's going to be a much longer term play that we most of us expect. And another example, though, and why I said this was sort of setting up the stage to talk a little bit about uranium, because being from Canada, you've probably been in touch, hopefully not literally, with uranium. But what do you think about uranium?
I mean, uranium seems to be suffering from more of a PR problem than anything else, right? I mean, to me, it seems like uranium, like if you're truly interested in a no carbon or a low carbon future, and then you truly believe that the earth is going to incinerate itself if we continue to burn oil and gas and coal, then the next logical step will not be a windmill, and it's not going to be solar panels. It's going to be uranium, and it's going to be nuclear power. But as all too often you can see on it's just a lot of what happens doesn't make sense, right? So I'm a long-term uranium bull, but maybe they could work on their PR a little bit.
I'm doing my part. Like, I have been fighting anti-nuclear people on Twitter a lot, and somehow I always manage to get myself blocked,
Ah,
especially when it's about wind turbines and solar panels. So
ah, like I don't think you can run, I don't think you can power a modern economy and modern lifestyles with the solar, with wind. Like, come on. And then just the amount of land you use. Okay, are you really environmentally, sound, or you really care about the environment when you spread, these gigantic solar panel farms across wide swaths of the countryside, and the windmills, and just come on, like the footprint of a nuclear reactor is so small, and the amount of power it puts out is so big, right? I mean, to just, but again, people aren't logical, and
sure.
not everybody's smart. Everybody, there's, I'm sure, a lot of people with agendas back, in the background, and you can see what's going on in
Unfortunately,
Germany. Yeah,
yeah.
you can see what's going on in Germany. I mean, they're talking about cold showers over the winter and turning off
Yeah.
the street lights because they don't have enough power, but they're also, on the same token, firing
Yet,
up their coal.
y-
Yeah, I mean,
yeah,
it's
yet
just
again, they just yesterday or today they voted that they're, or whatever, they said that they're gonna keep on track for the nuclear phase out. So they're closing the last 3 nuclear reactors this year, December 31st, and they're going to be out of nuclear completely this year in this situation. But yeah, I know what you mean about uranium. It's got
yeah,
a PR problem, seems
yeah.
like it. So I'm doing my part.
Well, I don't,
For the
and
most
the sad thing is I don't think they're PR problem. Like, really, what was the fallout? 3 Mile Island? Did anybody die? I don't think so.
no,
Fukushima, did anybody? I guess a few people died at Fukushima, but they went
one
in after
person
the
died.
fact.
Yeah,
Yeah, one person. I mean, and okay, there's radiation leaking into the environment, but I mean, what are the options, right? It's what are the options, and how often does this happen, right? So I don't know. Risk reward, something.
exactly. Risk reward something. Like 50 people died of Chernobyl over the last since over the first 25 years, something along those lines. And you would, I might think of doing a series, like going out and just asking people, like, hey, how many people do you think died out of nuclear accidents? Because I did that with my mom. I run all sorts of tests on my mom. Like, I talk to her about inflation, and
Your
because she's
poor
not
mom.
really aware of these things. She's a cook, likes making pastry, and she's a great mom, but she's not
Yeah,
an economist or anything. And
yeah.
so she was in Bulgaria when the Chernobyl accident happened, and she was convinced that my brother would go bald, which he did because of
Hmm.
radiation. But he didn't go. She was convinced that he's going to go bald because of the radiation. That's not a real thing, obviously. But I
Hmm.
also asked her a couple of days ago, hey, how many people do you think died out of that? She's like, I don't know, 1 million. And I'm like, try again. She's like, 25,000, 250,000. I'm like, no, 25. And I'm like, no, like about 50 people have been proven to be. So the public sentiment is, and my mom is not stupid or anything. She's not
Hmm.
unintelligent. She's much smarter than I am.
Hmm.
So it's just a public, I guess the public
Perception.
sentiment has been, perception exactly, has been worked into that place where where it's not really great for the nuclear sector. So
No, exactly.
mm,
I know in BC, like in British Columbia, where I prospect a lot, they've actually got a uranium moratorium. You're not allowed to explore for uranium in British Columbia,
mm.
which, I mean, okay, well, fair enough. I mean, just tell me what the rules of the game are, and we'll go and play. But I just always found that one a little bit odd,
Is that
right?
ever
So,
going away?
maybe in 2092, when the world is freezing and starving, and the last, I don't know. I mean, hunger is a powerful motivator, and starvation will change a lot of people's minds. And maybe one day people will realize that, we need resources, and we need, to survive, right? So
Mm, mm. Funny, there's so many wrong choices that happen real time, and now with the help of the internet and technology, we can see them happening real time and not after the fact, yet we keep doing them. you take making the
No,
wrong choices.
no, it's a common refrain, right? I mean, you can see the purveyors of doom, and to do this and that's going to happen. Well, I mean, you see it all the time, right? There's a lot of people out there that are just, it seems like they're obligated to dismantling society and civilization, or, maybe that's their end goal. I don't know.
Yeah, I asked a tweet. In a
Mhm.
tweet, I asked something like, it was the news of Germany, um, closing down those reactors in December, and I asked something like, what is Germany trying to limit its CO2 emissions or its population? And it was intended as a joke, but it's not really funny. So,
No, I mean, as you're living as you're living the shortages in the stores, and you're living the shortages of power, and you're living shortages, and then, I talk to the boys often, and I say, geez, wouldn't it be nice if we could just reboot and go back to 2019? you know, but such is life. I mean, there's again people out there with agendas, and then maybe foreign countries out there with agendas that are manipulating competitors or the competition, and you know, you know,
mm,
who knows what's going on.
that's true. That's true.
Mm-hmm.
To sort of go back to the deposits that we're talking about, though,
Mm-hmm.
do you think that there's something like you have to match the experience of the CEO to the type of deposit that they are working? Like, is it something like a too difficult of deposit for a not experienced CEO, or not?
Uh, I think it's more of a money thing. Like a CEO can also have a team. If you've got a copper porphyry project, you get a geologist that's experienced in copper porphyries, and then the company will be fine, and the CEO by default will be fine as long as he leans on his geologist, or, gets the proper advice that he needs at the time. I think a bigger sort of issue is companies that sort of bite off more than they can chew, right? And what I mean by that is, again, uh, epithermal gold silver is typically a smaller footprint, lower capex, easier to get into production, easier to define a resource and stuff like that. Gold targets, the same thing. But when you start getting into some of these copper porphyries, they can pretty quickly blow up a company's sort of capital structure. And so that's where your problem lies. It's, you want to be in on a copper porphyry. If you're doing it through a junior, you want to be in on a copper porphyry at the right time, and kind of make the discovery, and then hopefully rapidly get that discovery out the door to a bigger partner with deeper pockets, or again you risk blowing up the company's share structure pretty quickly.
So does that mean that I have to focus more on the geology or on the shear structure in that case?
I mean, focus on everything, right? I mean, focus on where the property is, at what stage the property is. Okay, are they going in and doing a 6-hole program? Like right now, I've got a company exploring a copper porphyry, a Kreft private porphyry project, and they're going in and they're doing a small program, and 3,200 meters, they're financed. It's going to be okay. Worst case scenario, they miss and then they move on to the next one, or best case scenario, they make a hit that's so overwhelming that they can get a big option partner with deeper pockets, like a major that can put in 50-60 holes 500 meters deep each, right? Those types of programs needed to develop some of these things can get pretty expensive, right?
Right. Is there something that I could do to increase my competitive advantage as a retail investor, though? Like, do I focus more on geology, specific part of the geology, or something along those lines?
No, just hope that wherever you are, I mean, that they have good discovery potential and they have a half decent management team, right? If you can see upside, right, the story gets told, and if you can take a look at the story and you can see upside in the story, right, then you can go, okay, it's worth the risk, it's worth the reward. Or if it's just it's it's 25 years of experience or 30 years of experience that I have in these things, and I still don't even know myself for sure what constitutes a slam dunk. So but like I said, I've seen some companies come in at a certain stage of the project, and you're probably, again, if you go back to a copper porphyry, you're probably more successful being right at the front end on the discovery end of things, as opposed to maybe resource definition, once it's a little less upside exists in resource definition. So maybe you want to be in at the early stages. So
it sounds to me like it's a more of a complicated process than one that you could put into a point by point system. Sounds to me like you're saying get experienced if you want to be a good retail investor.
Well, knowledge never killed anybody, right? But a
Yeah.
lack of knowledge sure screws people up. I mean, the more you know, the smarter you are, the more likely you are to make a good decision. I mean, it's that simple, right? So philosophically speaking, get smart or run the risk of dying. It's evolve or die.
Well, but so how do I get smart? What do I buy a book? Do I because if you tell me you spend 10 years in the sector, 20 years, that's how you get smart, I'm just gonna stand up and I'm gonna go into
you're gonna walk away. No, I get it. How do you get smart? What's the quickest? Talk to smart people, right?
Okay.
Right.
Yeah, that's what I'm doing.
Yeah, thank you. Now you find smart people and ask them questions as they pop up, like as time goes on. Like, I've got a lawyer, he's a super smart lawyer, he handles all my mining law. Every so often, I ask him questions, and over the course of a month or a year or whatever, I can learn a lot from the guy, and it's probably no different in the mining end of things. So you find somebody that's smart, and hopefully they're willing to give you a few moments of their time, and they can answer your questions. And as a retail investor, I mean, you can't expect, like you said, you can't expect to know everything, because it's such a complex business, and such, geology is complex, the business side of things, capital structures, et cetera, et cetera, et cetera. It just goes on, and you just step back and you go, fuck, that's overwhelming, right? There's so much to learn. But, on the same token, you can start to, you find things like, okay, what constitutes good management? Good thing to look into. That's not such a hard thing to research. What constitutes a good project? Okay, this thing's this thing's that, this is the upside here. And, you can rapidly get, at least, you can get competent. You might not be professional, but you'll become competent. And then, you just take it from there.
Do you think it makes sense to go to conferences and places like that? Because for example, for me, it's a relatively high cost to, go up to Colorado or something for the Precious Metals Summit. But it does seem exciting on the website, but I don't know if there's any value in that for me as a beginner retail investor.
Like, you're probably talking to the wrong guy here on the conference end of things, because I've never been to a conference. Like, I don't, we have one in the Yukon, and it runs every November, Yukon Geoscience Forum. And I think I've gone to about 50% of those, and it's in my backyard. So,
well, that's why I'm asking, because the people who tell me to go to conferences are usually people who sell tickets to conferences. And then I know you made your money, you're doing well for yourself, and you're happy with what you do, and you're sort of a no BS guy. So that's why I wanted to ask you about the conference, and your answer is sufficient. In my view.
I'm a little bit of an anomaly in the industry, though. So, I have no formal training. I've never been to a conference that allows me to think outside the box a little, more than maybe somebody that's got a degree, and there's 100 kids in the same class taking the same degree with the same teacher. And I would guess they all kind of think the same. And then there's me sitting in the Yukon with no formal training and never go to conferences. And, I mean, the path to success is varied, I guess. So.
That's a good saying. What do you think our industry suffers the most from? Like, what is if you could have a magic stick, you wave it, you make that one thing go away to make the industry better, what would you wave it at?
Yeah, I think it all revolves around PR. PR to the general people out there in the public. right? So, the general public looks at the industry and they go, holy Christ, it's a bunch of people pillaging the earth. You know, investors, retail investors look at the industry and they go, geez, it's a bunch of shysters. Everybody's trying to rip me off. And then there's the companies on the other side going, well, we've got to be pretty sneaky about what we're doing because we need to suck investors in. And so, I think it's the PR thing, and it's not just one angle of PR, it's multitude, like we touched on just now. I mean, it's just overall whether you're I could just imagine being a retail investor and trying to sift through all the horse shit and going, and there's so many companies, and okay, how do we know which one's which, and how do we know the management's honest, and how do we know this, and how do it would become overwhelming, I guess, for a lot of people. And and then there's always just too many people willing to take advantage of people and tell stories that may not be in fact true, right? And PR, that's where the problem lies.
Is it this over promotion part of that? You hear that a lot.
Yeah, for sure, guaranteed over promotion. It's terrible. I mean, you can on once a month, there's stuff that I see roll by that I just go, wow, I can't believe they said that, and wow, really, that many ounces? Yeah, okay. And then you kind of laugh to yourself, but is it good for the industry? I don't know. I don't think so. Right. I mean, if everybody was on the same playing field as far as promotion went, and the stories were told honestly, I think the share prices of a lot of companies would look a lot different, both negatively and positively.
In a perfect world. Yeah, I guess yeah, it's true. Is it maybe a good rule of thumb to think to yourself, like, if it sounds too good to be true, just stay away from it because there's other opportunities? So even if you miss on one or two, you're going to be more protected than you're going to miss out?
I guess it all depends on what your ability to handle risk is. I mean, just using prospecting as a sort of analogy to your question. I mean, I go on these things that are massive swings, like the baseball, taking big cuts, and sometimes they work out, and sometimes it's fabulous when they work out, and other times it's just, okay, well, we just blew $25,000 and got nothing to show for it. So, I mean, it depends on what your risk threshold is. But yeah, typically, I mean, if it sounds too good to be true, chances are it's probably not true.
But then at the same time, you talk to, and I haven't yet spoken to Eric Sprott, but you talk to him and he's like, you shouldn't care about what an NI 43-101 says as an investor. Those things are understated. You should be able to maybe look at that report and be like, okay, no, this is going to be much bigger than what this report says. So he's sort of being shoot for the stars, or don't even try at all. And he's gotten a lot of money from it.
I mean, you have to be able, it's easy for him to say, because he's got, how many years of experience, I don't even know. Does he have good geologists on staff? Yes. Does he have all this experience? Yes. Does he have investment guys? Yes. Does he have people, does he have a gigantic team behind him? Yes. So for him, it's pretty easy to say, hey, let's shoot for the stars and stuff like that. But for your typical retail guy out there, you don't have the resources that Eric can tap into. So, one of my favorite tricks from a prospecting perspective, and I guess it's applicable to investing as well, is just to take a look at projects and say, what's undervalued? I like taking an undervalued or underappreciated asset and taking it to the next level. For us, that's kind of, we seem to do pretty well at that, where we can say, look, the previous workers were stupid, or they missed something, or they just tapped into something when they ran out of money. Here's how we take this project to the next level, and then then we make our value there. So I think as a retail investor, you want to take a look at a project and say, okay, there's some historical data here. It looks promising. Does it sound like there's a hole in the previous workers that this company can now exploit? Check, check, check. Well, okay, that makes it a reasonable bet.
So value in terms of how much money has gone into the ground, but also maybe value in terms of how much time has. Okay.
Missed opportunity. Typically, it always revolves around the previous guys. Have they missed an opportunity? The historical work, has it missed something? Can you can you read the assessment report or the history on the property and say, okay, they missed, here's a big hole. Maybe it's new science, maybe it's new technology, maybe it's, like I'm looking at a copper gold porphyry target in British Columbia. And, there's a series of copper property or copper showings on the property, but there hasn't been any sort of real modern exploration done on it. And so it's a very early age thing, lots of showings. I look at it and I say it's prime ground for some prospecting that me and my boys can do, and an airborne geophysical survey. So again, it was missed, maybe not missed opportunities, but sort of unloved assets. What's that guy? There's a guy that used to be on TV that would buy old, broken, and used gold. And he was selling, he was like this, sell me your old, broken, and used gold and I'll give you cash for it. And that's kind of the the sort of mentality or the sort of psychology that you have behind prospecting, where give me your old, broken, and used property and I'll turn it into something.
But following that logic, though, wouldn't that lead you to maybe mines that were already in production, but they didn't run out of gold or anything? They just, like, the market got bad, or there's a big flu in the city that they were working, something among those lines. Is that more of a dreamland category?
That's probably a dreamland, like a gigantic, like a mine that's been in production is probably, it's pretty rare something like that would take out a mine per se. There's always somebody left over in the mine, in the company that'll sort of keep the asset moving forward. But, for early and mid-stage exploration projects, again, like I said, I probably assess or evaluate 100, maybe 150 a year. And
wow.
Yeah. And, of those, maybe we take, good stabs at 20. And of those, maybe, 3 or 4 or 5, 10, maybe half work out. So it's you whittle down these opportunities, and, you just, again, you have to find your sort of niche or your expertise, or where your team or your knowledge can take you, and kind of, I'm not saying don't shoot big, but, maybe figure out where your assets are, and deploy them correctly.
But 150 a year, that's I'm not a math genius, but that's 3 a week. Does that mean that you're quick to take your decisions? That's what it means. Is that a necessity, or is that just because you're so experienced?
It's a necessity, and it comes, you're able to do it because of experience, but it's also a necessity. I mean, sifting, right? You get the strainer out of the kitchen and sift some rocks from the yard and see what's left when all the sand washes through. You end up, I mean, you have to do a lot. Like, I find I have to do a lot to come up with some gems, right? You have to do a lot of sifting, and then typically it's, you read a report, or you read a couple reports, you do a little bit of a compilation, you throw some maps together, and then 2 days later you just go, screw it, it's no good. And then on to the next one, and on to the next one. And some of the ones, it's sort of like passing from grade 1 to grade 2 to grade 3 to grade 4, right? So it's a step-by-step process where every time you take a step, you need your project or your idea or your concept to improve, right? And so if you're, looking at a lot of projects, and some of them are improving and some of them aren't, well, then that tells you something, right? And so that's how our typically our exploration continues, right? So it'll, the research, and if the research holds water, then you go to maybe more detailed research, then you go to field exploration, first phase, second phase, and it's just a phased sort of process.
So you don't suffer from analysis paralysis?
No, God, no. I suffer from analysis overload, I mean, right? I would say that the sort of the biggest hindrance to the business right now is that we have too many projects or too many ideas, not enough capital, right? So, or maybe even not enough capital, but not enough time. Time is a precious commodity. And, again, we developed some projects out of Dease Lake. We had some concepts. We tested the best of them. It's the time. It's time. Just, time spent waiting for assays is right now is tough. Finding the time to go out to these things, it always comes back to time, I think, for us, right? We're not overloaded, but we're kind of maxed out, right? From a private perspective, we're about as far as we can go without adding more. It's kind of, it's like the juggler where he's got 3 balls and then he's got 4 and then he's got 5 and then suddenly all the balls come tumbling down. So, we're probably a 6-ball juggler and we've got 5 in the air right now.
Wow.
So
Rick Rowe also told me that something natural to the natural resource sector is that we've got too many companies for the number of projects that we have. So the projects that we have should be more consolidated to sort of cut G&A, meaning as an industry, we spend too much money on general and administrative expenses relative to the value that comes out of the ground. So that's what he told me.
Yeah, I mean, that makes a lot of sense. I mean, you can see it, right? There's not, what is it, like the batting average of prospecting, or the batting average, take your standard property, 1 in a 10,000 will go to a mine, or 1 in 1,000 will go to a mine.
Wow.
Right. So that's your typical batting average. I think I've been able to, given enough time, I think my batting average will be better than that. But, you're typically, I'd say, if you're following, say, 50 juniors, maybe none of them, maybe one of them will be, depending on, again, what stage the companies are at, but say early stage stuff, it's a tough game, right? And one of the sad things too, or maybe not sad things, but you'll see companies, again, going back to this whole discovery and the timing thing, you'll see companies make a discovery or just start tapping into, a mine, and then for whatever reason, they'll lose the property, or, they'll fold, or the company will go defunct, and 5 years later, somebody will come along, pick up the project, take it to that next level, and reap the benefits of what was done 10 years ago.
It's true. Bernie, I'm looking at my clock here, and you told me that you got to go at 11:30, so that's in 4 minutes. There's been a good conversation. I think we should do a round 2, unless I've annoyed you enough that you don't want to see me again. But is there something that you came here hoping to talk about, but I failed to bring up?
I don't know. It's pretty broad ranging.
Yeah.
I liked it. It was good.
There's nothing that you want to sell me here at the end, or anything that you want to...
Follow Bernie Kreft. You'll make your own decisions. I don't want to pimp and promote. I mean, I'd like to, but if you liked what you heard, see what I'm doing.
Good stuff. Thank you for investing your time with me, sir.
Hey, take care, Antonio.